All right, guys, here we go. So I'm going to start this thing off, and I'm going to hand it off to Rob. If you can hear me, just give me a yes in the chat box and make sure I've got everything configured here. And then I use this little righty gadget, so I'm going to ask you to potentially answer what this equation is to make sure that my little ink is working. I did just get back from Turks and Caicos with my family on a family vacation. I arrived at the house last night at 2 a.m. So I'm going to try to get through all this as quick as I can. And let me erase this. It looks like the ink is working. The mother of all financial bubbles is about to pop again. Are you ready for it this time? So the theme of this is like how to trade with the sharks without getting eaten alive, or the mother of all financial bubbles. The reason I say that is because I took my kids scuba diving over in Turks, and we saw about 4 sharks. And they got pretty close, and it was pretty cool. And so I'm going to teach you how to do that, but in the markets. All right. So first warning disclaimer, you should never trade with more money than you can afford to lose, because odds are you're going to lose it all and then some. Okay. I want to applaud everyone from being here today, because you are investing in yourself, which you'll get the best return on. It's the best type of investment that you can do is in your continual education in whatever you're trying to do, whether it's business, real estate, or trading in this example. So it is really, really important. CFTC Rule 4.41, read it, memorize it. You never trade with more money than you can afford to discretionary lose. I like to make the warning disclaimer a lot worse and say your trading career is probably going to end up like a bad country song in reverse. Your wife is going to leave you for your best friend. Your kids are going to grow up to hate you. Your dog's going to die because there are no cats in country songs. They're going to repossess either your Chevy or your Ford pickup truck, and then they're going to foreclose on either your single wide or double wide trailer. If you understand the warning disclaimer that I just made you aware of, give me a yes, please. That way, if the CFTC or the NFA audit this, they'll be like, well, he tried to scare the shit out of them, and he did the right thing, so he should be solid in that situation. All right. My name is Hubert Centers. I'm known in the trading and investing niche as a person that has a no BS approach to trading and investing. Not really by design, it's just kind of how I grew up, and it's just kind of how I was raised. Real quick, real informally, I don't have polls set up on this webinar, but what do you trade the most of? Stocks, options, futures, or forex? Stocks, options, futures, or forex? What do you trade the most of? Just so I can see who all's here, because every webinar group is a little bit different. Now, I know there's probably a little over 3,000 people registered for this webinar, maybe a little less or a little more. GoToWebinar only holds 1,000 people, so don't log out, because if you log out, you probably won't be able to get back in. All right. Now, where are you at in the current stages of your trading career? Level 1 is where you learn how to lose lots of money quickly. It's called your burn rate, okay? Level 2 is where you get pissed off because you're losing so much money, and you slow down your burn rate. So this would be a very high burn rate, and then this would be a low burn rate. And then level 3, you make some money, you give it all back. Make some money, give it all back. Make some money, give it all back. Level 4, you start making a consistent income, but you got some of these jaggy drawdowns, which you have to deal with. Level 5 is where you've learned how to do that. And then at the peak here, welcome to the club. Congratulations, you made it. Now keep on growing. Once you've got it up, keep it up. What level are you at in your current stage of trading? Are you level 1, 2, 3, or 4? 1, 2, 3, or 4. All right, nice. Lots of 3s. We've got some 4s in here. Nice, nice. We've got quite a few 4s. Now, when I was growing up in the hills of Eastern Kentucky, I had about 4 or 5 things that I could have done when I was a kid. Both my mother and father were factory workers at American Standard. You've probably seen the plumbing fixtures, commodes, faucets, stuff like that. I could have been a coal miner. I decided not to do that. I could have went into the marijuana or the weed business, the illegal kind. Could have been a meth either cook or dealer, or I could have went into the moonshine business. I decided that all 3 of these had a very large risk to reward ratio that I wanted nothing to do with, because if I'm going to do something, I'm going to do it to the best of my ability, which would have landed me in an orange jumpsuit in the federal penitentiary fighting Bubba over who gets the top bunk and who gets the bottom bunk. So what I decided to do is I decided to go on my quest when I was about 17 or 18 years old. I wanted to, learn how to make a lot of money as a kid. That's how you grow up. If you grow up with not a lot of money, you want to make a lot of money. I used to think $1 million is a lot of money. It still is. It's not what it used to be. So I went on my quest and found out that there were three really good ways to make money: owning a business or invest in business, real estate, okay, or trading and investing. I do all three. I don't just do the trading and investing thing. I do business, real estate, and trading and investing. I've never seen anybody go from start to finish up here, if you're trying to make $1 million, in less than 5 to 8 years. And then after that, they call you an overnight success story, which I think is kind of funny. If it happens to you, heads up, it's going to piss you off the first few times, because you're going to be like, overnight success? I have been working my ass off to the bone for the past 8 years. There ain't nothing overnight about it, right? So I don't show you any of this or tell you any of this to impress you, because number one, I don't think it's impressive at all. I show you and tell you this to impress upon you that if a fat redneck from Kentucky can do it, I think you got a shot too. I can't guarantee anything. It's trading, right? There are no guarantees in life, and there definitely are no guarantees in trading, all right? So when I was growing up, I also watched a little Ghost of Mr. Chicken, Scooby-Doo, and Batman on TV. So I've got this really cool, these bookcase doors that lead into my office, and all you do is you click a button, pull a book, and it opens up into my 1,800 square foot office that I work in every day. Yes, I know it's immature, I know it's childish, but that's just kind of how we've got our office set up here. So congratulations, you are about to witness one of the biggest bubble pops of all time. You are in the right place at the right time, and here's why. Now, first off, I got to get this off my chest. I'm not a doom and gloom guy. I think the market goes up more than it goes down, okay? Odds are, if you're just going to be a buy and hold, you're going to make more money than if you do a sell and hold, right? So I am not a doom and gloom, the sky is falling. I'm also not a perma bear, all right? I'm kind of in between. Wherever the volatility is where I like to go. I do think that the market is definitely due for a 10 to 20% pullback, though, all right? Now, the markets are going to pull back more soon. Now, if you are not ready, you are going to lose a lot of your money in the markets if you make the wrong moves. You have to do the right things at the right time. Doing the right things at the wrong time will not work. Today, you'll discover one of the best ways to do just that. I'm going to show you how to time it better, in my opinion. This tactic has helped me catch some really great moves. Let's start with Aesop's Fable here. So the scorpion is going to be Wall Street, and you are going to be the frog, okay? So there's this frog on this island. He ran out of food. The frog comes over to the island, talks to the scorpion. Scorpion head goes, hey, man, give me a ride over here to these islands. I've ran out of food. And the frog was like, I'm not going to fall for that. You're going to kill me right here and eat me, and then I'll be dead. And he goes, well, as appetizing as that seems and sounds right now, after I do that, I will still starve to death because you will be dead. However, the scorpion gets the frog to fall for this, okay, about halfway across their little journey there, the scorpion stings the frog in the back. And as they're sinking to their watery grave, the frog looks up to the scorpion and goes, why? Why would you do that? And the scorpion goes, it's in my nature. If you continually fall for Wall Street's bullshit, they are going to continually pick your pockets. So you have to learn how to think for yourself, and you have to have a pretty good BS filter. Bubble market poll. Do you think the market is too high and that stocks are overvalued? Now, I don't have a poll set up for this, but just give me a yes or no. Do you think the market is too high and that stocks are overvalued? Getting lots of yes. Oh, got one no. 2 no, 3 no's, 4 no, 5 no's. The majority of your yeses, though. All right, cool. Bubble market. Do you think the market is going to dive lower? All right. Now, the cool thing about this is you can use this strategy depending on what market you're going to do and look at. So for me, I trade a lot of index futures. I trade a lot of bonds. I trade a lot of stocks. So I'm able to find different markets that I can play the bubble strategy or tactic on, and leave the other ones that are going higher alone. I can also trade those higher too if I want to. So let's build our case. Now, it's 2017. You could Google whatever you want and find whatever you want. But we're going to go fear, greed, logic, and then experience. I've been trading for 25 plus years, so I'm going to give you a little bit of experience in there. We're going to talk about the fear, the greed, and the logic when we go through this. So Scary parallel or not, a lot of people use this chart to try to forecast when the market sells off, and it's not really 100% accurate. It's neat to look at. Like, you can sit there and go, oh, there's 1928, 1929. This is the past 18 months, and then this would be 15, 16, and 17. Clearly, this chart went higher, and now it's starting to retrace. What I want you to focus on is when you do get to these tops, you see these jagged little drawdowns you get before it goes and drops a little bit lower? That's what we're looking at. Another scary parallel, or maybe not, right? So that's 14, there's 15, there's 16, that'd be 17. So you can see a lot of people said, oh my God, it's going to crash right here. Didn't really happen. So what happened is this would be our underlying Dow market that went like this right here. And now it's starting to roll over a little bit like that. So I'm looking for this to retrace anywhere from this amount to potentially that amount. So this would be a good 10 to 20% retracement. This would be a good 50% retracement for us. So we've experienced in the past the tech bubble, the housing bubble, and now we've got more bubbles today. In this chart, where do you think we are in the evolution? Are we at enthusiasm, greed, delusion? Oh, new paradigm. PE ratios don't matter anymore. Oh, you don't actually have to make like Tesla. Tesla kit continues. Technically, it's really strong. Fundamentally, I have no idea how that works. How Tesla makes a car and they lose $4,000 to $6,000 on a car, right? But Amazon did that same thing, and they just recently went, profitable over the past 3 years. So are we at greed, delusion, new paradigm? I don't think we're at denial yet. Return to normal, fear, capitulation. Definitely not capitulation. No real fear out there. Return to normal, not really. We're either in greed, delusion, new paradigm, or denial. Either way, we're topping, right? All right, America's most dangerous bubbles. U.S. equities, U.S. housing bubble 2.0, the tech bubble 2.0. So the U.S. equities, the S&P 500 was up 154% from its low in early 2009, bringing it to a level of overvaluation. This is comparable to the levels that preceded the major secular bear markets of the past. Now, a lot of this was they stoked the fire by using the ZIPS or the zero interest rate policy, and now we're starting to raise those rates. So that bubble is going to start popping, right? Now, the odd thing is, a lot of people will tell you, like, hey, if interest rates rise, the bond market will be going lower. That actually has not happened yet, and they've raised it 3 times, and the bond market is just hanging there. So there's definitely something up there. U.S. housing bubble 2.0, artificially low mortgage rates, courtesy of the Fed's QE programs, caused the U.S. housing prices to rebound at an alarming fast rate, with prices rising 11.2% in the first 7 months of 2013. The fastest growth since 2004. During the heyday of the bubble, through housing prices are rising faster than significant income. Here's stuff you need to look for. When you start seeing shows like Flip This House, Flip Flop, and you start seeing them in major markets like Arizona, Nevada, Florida, California, stuff like that on A&E or the Discovery Channel, when you start seeing people talking about flipping houses, you know that the housing market has topped out. You can also do that with gold too. Like you see a lot of gold stuff on Discovery and stuff like that. You can also tell when gold's going to pop because people on the side of the road or in lower income housing and or neighborhoods will be like, we buy your gold for cash. All right, you'll see those things propping up like crazy. It's also a really, really good telltale sign that the market is going to pop. Now, U.S. housing bubble 2.0. On housing, the co-founder of Case-Shiller Home Price Index said he's concerned that the run in recent years may not continue. We've seen a big increase in home prices since 2012, and I won't bet on that continuing. Now, here's some of the headlines of the last little correction that we had. And this is the stuff that you'll see after the market falls a lot. They won't do it ahead of time. They never do, okay? So you'll see this isn't like 2008, but a correction is coming. And they'll do it when the market is already down 10 or 15% of the time. A 20 to 30% correction is possible. Has the market really time warped back to 2008? Markets may see 1998 style corrections. Wells Fargo. China shares tumble in late trade-off. Asian markets sell off. Worried about a U.S. recession? It's already here. So you will see this stuff on CNBC and Bloomberg. It'll all be after the fact, right? So heads up. They're not usually forward pacing or future projecting. They're usually all past, like the market gets smoked, and then you start seeing headlines like that. Stock futures sink to pre-market trading, hitting at lower Wall Street open. You'll see S&P 500 in a world of pain, so sell any rally, the technician says. So the tech bubble of 2.0. Now I can speak about this with some really good experience. I've recently exited a angel investing tech exit at 55x, so that is definitely a bubble when you start talking about that stuff. I do some angel investing, I do some VC stuff out in San Francisco and Silicon Valley, and when you start seeing stuff now, not all of them are bubbles. Like Facebook and LinkedIn, they have figured out how to make money. Companies like Yelp, Groupon, stuff like that. That stuff was well overvaluated. When you start hearing Groupon say, hey, we've invented a new form of accounting, you know that stuff's made up, right? Like if you say, well, I have a new way to do my books. It's called the Groupon way, where we overestimate our sales, and yes, that's why we're profitable. So anytime you start hearing companies doing stuff like that, you know it's crazy. Now, you also know it's crazy when Facebook buys WhatsApp for $19 billion, Facebook buys Instagram for $1 billion, Snapchat seeks funding. This is before it went public, and if you bought Snapchat, you're in a world of hurt right now because it's probably going to go lower. Uber snags a $41 billion valuation. One of my buddies passed up not one, not two, but 3 different chances to invest in Uber. They only wanted $25,000, which is not a ton of money. And at today's evaluation, his $25,000 would have been worth over $300 million. And believe it or not, he still doesn't cry when he tells me that story, although he probably should. All right. So when you start seeing evaluations that double, triple, or quadruple in a very short amount of time, you're definitely in a little bit of a VC, angel investing, or .com bubble. Uber's previous valuations, their latest valuations, Airbnb up 300%, Dropbox up 150%, Square up 85%, Pinterest up 32%. So be careful in that stuff, all right? It's kind of like Snapchat. Snapchat, when they went IPO, they're like, well, we're not profitable and we don't ever know if we are going to be profitable. That's stuff you have to look out for, okay? Snapchat's probably not going to be the next Google or Facebook. Should we be worried? I'm very concerned to see so many bubbles inflating so soon after the crisis that was caused by the bubble in the first place, because the lessons of the last crisis were not learned, and we are destined to repeat them until we finally acknowledge the errors of our ways. So when the banks kind of went bust, did Obama send anybody a check in here? I know I didn't get one, like JP Morgan, Chase. Like, so did anybody else get a big check from Obama if you had a drawdown that year, like a couple of the other banks, like about a half a dozen of them? I didn't get a free handout like the banks, and you're not going to either, because if we place a bad trade, nobody really cares about us. We're just going to blow up and go away, right? Unlike the big banks that has Uncle Sam to lean on. So another thing that you can do is you can look at the crusty old bold traders. Now, there's a saying on Wall Street: there are old traders and there are bold traders, but there's not a lot of old bold traders. Now, I think George Soros here looks a little bit like Senator Palpatine from Star Wars, but the cat's got skills. Whether you like him or whether you hate him, he's a pretty good market timer, okay? So anytime he starts doing stuff, you can look at his filings in his hedge fund, because they're all public, and when he starts making $2 billion bet, what you can do is you can look at his 13F quarterly report. Now, the one thing about it is not real time. It is delayed by 45 days, but you can figure out what's going on in their mind, how they're positioning themselves to take advantage of big market pops or big market drops, okay? So really, really important when you're looking, and you could look at Buffett stuff. You could look at anybody else that's got a big fund. You can look at their 13F filings, which come out 45 days delayed, and you're like, man, how can that be useful? Because you can learn and teach yourself how the crusty old bold traders are positioning themselves with the markets, even if it's 45 days late, because they're like big tankers. It takes a very long time for them to turn around. For you or I, we can jump in and jump out in half a second. For them, it's going to take a very long time for them to get in and get out of their positions because they have a lot bigger and deeper pockets than you or I do. All right, Soros, it's the 2008 crisis all over again. So they'll start picking up stuff like that. Now, a sign that the bottom may be in is when you start seeing, so you've got Faber on CNBC, which he's the perma bear, and I love those guys. Those guys are hilarious. Like, they'll say, like, the market's going down for the past 25 years. Like, man, what are you doing? Like, you've been saying the market's going to pop for the past 25 years, and it's went up. I understand that you got a few little drops in there, but for the love of goodness, be fluid with the market. Same thing with Kramer. I would say Kramer's more of a perma bull, right? I think you should be kind of in between. You should be really fluid and flexible and go where the volatility is. But when Kramer starts talking about Kramer continued checklist for a real market bottom, then you can start thinking about buying some stuff. Now, like I said, I don't think we're in a huge, massive downtrend yet, but we are definitely due for a good pullback, 10, 20, maybe even 50% on index futures. Kramer's game plan, cash is king next week. Well, so when he's saying stuff like that, he's keeping his powder dry. Then you can start thinking about buying some stuff. So now that I've kind of proved to you that this is what's going to happen in the next little pullback that we're about to experience, and I've proved to you that's going to happen, that the markets are going to drop again soon, do you believe that Wall Street is lying to you again? Like, they'll keep you up. They'll be like, oh, no, it's all fine. It's just a little slow. The market's fine. Don't worry. Do you believe Wall Street is lying to you again? And it's kind of like lawyers, right? You know Wall Street's lying to you, and here's how you know. If their mouth is moving, you know they're lying. They don't design any products that are not specifically designed to extract you from your cash. Now, they will have some lower dollar stuff. There are some people out there like Vanguard, which has a low expense ratio, and that's good for you. But as a whole, Wall Street designs their products to extract you from your precious cash. So, all right, we're going to talk about how to measure the strength of the move. Ask yourself these questions. Is it getting stronger, weaker, or is it about the same? So really quickly, and I'm talking about index futures here, but we can talk about pretty much anything. Do you think the market's getting stronger, weaker, or is it about the same? Now, when we do that, I'm going to walk you through and show you how this works. I've got some really good moves in bonds, gold, Apple both ways, and much, much more at the end. I'm going to try to go over nothing but live charts at the end of my presentation. Failure patterns and trend reversals. So I've been able to catch gold from here to here. Notice I did not say I shorted it at the high and I covered it at the lows. I've been trading for 25 plus years. I think I've done that maybe 6 times in my life. That's not really a trading strategy. It's more of a luck thing. Also, bonds, shorted them here, covered them here. Did not short them here and did not cover them here. That's called fantasy. That does not really happen in real life. Apple was able to short it here and cover it here. Also, Apple was able to get it long here and didn't exit it in there. So you can see I got long here and exited here. So I missed the dead high and I missed the dead low. That's okay, though. I made them meet in the middle. So best ways to time this. So what I do is I use a combination of these 3 tools. I use Ichimoku, cloud charts, ADX, Parabolic SAR, and then my experience of being through a few of these crashes or pullbacks on how to actually trade these suckers. Biggest reasons traders get stuck at level 3 is over trading. They trade in chop, and they end up doing the right thing at the wrong time. One of the most asked questions I get is, how do you identify the trend versus the chop? And it's a great question, and it's pretty easy with some basic tools. So the ADX will help you do this a lot. So let's go through the ADX. So the ADX stands for an average directional index, or some people call it average directional movement index. ADX is non-directional, so it will quantify a trend's strength regardless of whether it's up or down. Okay? It's a method of evaluating a trend, and it can help traders to choose the strongest trends, and it's useful to let your profits run when the trend is strong. So here's a guideline that I use. If the ADX is greater than or equal to 20, then that equals TREND. If the ADX is less than or equal to 20, then it equals chop, and you're probably not going to do too well in the markets. Now, does everybody have a black screen with a yellow and red squiggly line with also a green horizontal line? All right, so here's how you use this, or this is how I use it. There's several different ways you can use it. I just simplify everything. So we're going to call this our T line, or our threshold line is going to be 20. Above 20 is going to be a trend. Below 20 is going to be chop. Okay, so this is trend, and this is chop. So if you're above 20, you're trending. If you're below 20, you're chopping. Below 20, chopping. Above 20, trending. So that's how you use it. It's really simple. Now you can use it and make it more advanced and stuff if you want to. I tend to keep stuff really, really simple. It makes it easier for my small brain to wrap around. So in this example, you see just an old chart back in 2015 here of the Dow. It was trending, and then out of nowhere, the Dow just went dead flat from here to about here, and I put this little blue block around the Dow. Even though it was moving some, this would be a chop market where you'd want to avoid, and then breakout, avoid, breakout, avoid, and then here we go, nice little trending move to the downside. This is the type of stuff that you can look forward to if we continue to trade lower. All right, here's another example of an old chart of Apple, and you can see here this is tradable, non-tradable, tradable, chop. You want to avoid this, and then tradable in both directions. The ADX is non-directional, so it will quantify a trend strength regardless of whether it is up or down. So let's take a look here on a 3-minute chart of the ES, because it'll work on both day time frames and intraday time frames. So at the open here, ADX is above 20, tells you that this market is trending, and then it drops below 20 here, and then it trends again. And then here's another example. So this day it's going down, and this day it went up for the most part. You can see that the ADX for the most part all during that day was tradable, except for a small little slice of time where it told you to avoid the markets. Here's an example of Apple on a 3-minute chart. Is the ADX above 20 at 0.1? Yes or no? Yes, the ADX is above 20, above this 20 threshold line. That means that this market is trending. Now in the AM session, it went up, and then it went into chop mode, okay, C-H-O-P, there you go, where it said avoid the markets. Now I didn't do it perfectly, right? There's a little squiggly I missed, but we'll give me the benefit of the doubt here. And then in the PM session, the market went down, and the ADX was above 20 here and above 20 here, and it gave you a direction up here and a direction down there. So the ADX is part of the solution. Okay, the ADX only solves part of the problem. This is how we're going to fix the rest of the issue. We're going to add the bull speed versus the bear speed component, and all I've done is I've taken a really simple indicator and made it visually easier to use. Okay, so we call this the power shift. The T line is still here. T line is 20. So you can see here that at 0.1 is the yellow line above 20, yes or no, in this daily chart of the S&P. All right, so yes. Now, if the green histogram is above the red, then that means buy, or it means the bulls are in control. Now, notice that the ADX is still above 20, but the bears showed up, and then this means sell or bearish. Does that make sense? So all I've done is I've taken a really simple indicator, added the histogram function to it, and made it really, really easy to use. It's going to simplify the process. Here's another example. So at 0.1, the ADX is above 20. We're bullish here, and then we go bearish. So since the green is on top, this means I'm trending bullish until I start to trend bearish. So in this case scenario, you'd be long here, and then you'd exit here. So if you had a daily uptrend, you would buy at the open. If you had a daily downtrend, you'd avoid all this, and then you'd short this instead. All right? Now, remember this example that we did from Apple. Which one's easier to use? Remember, this is AM up, PM down. Which one's better? Chart 1 or chart 2? Chart 1 or chart 2? It's kind of like being at the eye doctor, right? Whole lot easier to use. ADX above 20. Bullish for the most part until you see a little bit of bearish movement here. So you'd be long at the open and then sell right here. avoid this time as the ADX drops below 20, and then boom, the bears show up, we're trending, and then we're selling off into the close. All right, so here's Apple. As you can see back in this old chart, Apple used to be non-trending, and then it went trending, and then you had bears, bulls, and then bears. So you had a little bit of a whiplash effect there, and then it started to really sell off. All right, Parabolic SAR, dynamic support and resistance, stop and reversal signals. It's a trailing stop. So this was developed up by Dr. Wilder in his book, New Concepts of Technical Trading Systems by Wilder. SAR stands for stop and reversal. And all that means, here's the definition. If you want to read it really quick, I'm going to grab a quick sip of water, and I'm going to show you what the visual looks like. Okay, so here's what this does. The blue dots or cyan dots below the price action is going to be a long signal. Now, this is an always in market, so you're going to be long, and then you're going to go short, and then long, and then short, and then long, and then short. I don't use it that way, although a lot of people do. What I use it for is a directional bias or as a trailing stop mechanism. Here's another example. So if you're long, in this case, the daily chart of Apple, you'd say, all right, I'm long here, I'm staying long, and then you could exit here and then go short. Short here, and then you would cover and then go long. It's designed to be always in the market. Long or short, never flat. You don't have to use it that way, but that's kind of how it's designed. Here's another example of crude oil, as you can see. Short, cover, right? Here's another example of bonds. All right, then what I do is I just add the clouds. Now, clouds help me stay in the trends a lot longer. It will help me avoid more chop. So let me pull all this together and show you what I mean. So what I'm going to do here is I'm going to go live charts, trust but verify. I'm going to show live charts and pull it all together. So let me go over here to a little trade station, and what we're going to do is we're going to look at the NASDAQ. So these are just 3 indicators. One of them is a little proprietary, but not terribly so. But walk through this. Is the ADX above 20, yes or no? This is the current NASDAQ chart. Yes. So that means we're in trend mode, correct? Now let's go to the power shift, which is basically the ADX on steroids. Boop. All right. Now, on this chart, who's in control? ADX is above 20 still, right? Is the bulls or the bears in control? And here's an easy way to tell. Whoever's on top's winning. So bears are in control right now. So we want to be bearish in nature. All right. Then I'm going to add the Parabolic SAR. Bink. Next tab. And you can see the Parabolic SAR went negative right here and said, okay, that's a sell. And then Friday it just went flip-flat back positive. Interesting. But the bears are still in control, so we might get a little bit of bounce next week. And then I just throw it all on top of the cloud. And I go, okay, NASDAQ is still bullish, but so far we broke below the turning in the standard line, and now we close back above it. So we're either going to retrace back and go above 5,900, or we're going to roll back over. And then all I do is I just put it all on one chart, and I try to figure out what's going on. Now, do you see a structural difference between the last sell-off and this sell-off? So I'm going to call this a minor chink in the armor. This is a major one. This one only had one bar where the bears were in control. This one's had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, about 12 days. Now, it is still above the cloud, but this is a nice little sell-off to take advantage of to the downside. Now, what if I'm wrong? Well, that's okay. I'm wrong on lots of stuff, my wife tells me, and the market's going to tell you that too. And if you're not cool with getting stopped out on a lot of stuff, you're in the wrong profession. This profession is going to love you. You cannot, you can be wrong longer than you can stay solvent or liquid, which just means you're going to run out of cash if you don't stay flexible and go with what the market's trying to tell you to do. So let's compare some other markets, and let's see how this would have worked for us, okay? I still think that the NASDAQ and the index futures are due for a more substantial pullback, and I think we're going to get it too. But let's take a look at a few other markets here using this strategy. So let's take a look at crude oil. Using the same strategy, should we be long or short crude oil right now? So sells up here, below all this, trending lower, bearish. See what I'm talking about? Let's take a look at coffee. Coffee. Should I be bullish or bearish this? I should be bearish this thing. Let's take a look at gold. Gold. So gold I should be long. We're trending and the bulls are still in control and I'm bouncing off the cloud. All right, let's take a look at the ES. ES, what should I be doing in the ES right now? I should be doing nothing. The ADX is too low to trade. It's non-trending. I should be doing nothing. Let's take a look at, NASDAQ. We just looked at that. I should be, this one's a little harder to call, but I like the short side better than I like the long side with a tight stop loss. But you could play this both ways because you've got bears in control here. It's trending, but you're above the cloud. So it's not 100%, so I would probably pass on this, okay? Let's take a look at, what do we got here? Let's take a look at the Russell. The Russell, what should you be doing on the Russell? Absolutely not a thing. This thing has been non-trending since 2017. It's dead sideways. You have no advantage. Yeah, and the Parabolic SAR just flip-flopped too. You're correct. So you see this right here? Non-trending. So the Russell you stay away from. Well, what about the Dow? The Dow is saying trending, and I'm going to go higher. So that's a little bit better trade setup, in my opinion. You can also do this with stuff like soybeans. Soybeans trending lower. So does that make sense? Now, you don't have to just do it in futures. You can do it in pretty much anything else that you trade. So let's go through some popular stocks. On Facebook, Facebook is going higher, but it's non-trending. If you held a gun to my head, I would say, okay, it's a better long than short, but the ADX is a little low. Wait till the ADX ramps back up towards 20. Okay? Yeah, unless you're trading spreads on Russell. Yeah, that's a strategy. Let's take a look at Apple. What's Apple saying? Apple's saying I'm trending. Oh, this is beautiful. Look here. What's Apple going to do? Trending lower, and it's more bearish than the NASDAQ. So Apple is probably going to go down a lot lower than this. Parabolic SAR, below the cloud. Trending, bears have control. What about Netflix? Netflix it's above the cloud, and it's done a pullback to the cloud. On this one, Netflix, I would be a buyer as soon as I got a Parabolic SAR dot below me there, okay? Because it's bounced off of the cloud. And I would keep a keen eye on this. If this flips, you can see that the bulls are trying to just barely overtake the bears. They haven't done it yet, but they're getting closer. Let's take a look at Google. Google is trending and bullish as of Friday. So the bears had a nice little pullback, sold it off a little bit, and now we got bullish control back in the seat here. Tesla, this is pretty simple. Is this long or short? Yeah, okay. Pretty simple, pretty simple. Let's take a look at Twitter. Twitter, as of the past 3 days, is trending bullish, going higher, probably going to 20 bucks. AET, bullish, trending above the cloud. Looks like it wants to go to 180. CERN, bullish, trending, going to go higher. NVIDIA, bullish, trending, going to go higher. Hasbro, bullish, trending, going to go higher. Amazon is bullish, trending, going to go higher. Now, they did have a little bit of rotation here from the bulls to the bears, but it still looks like it's pretty good intact there. Chipotle, also known as salmonella. What is salmonella right now? Is salmonella a long or a short? It's a short, right? It's trending. Bears have control, and it dropped below the cloud. All right. FBHS is almost trending. Bulls have had control of it, so this would be a new long here. Kroger, Kroger's going to get smoked, so is Whole Foods, because now Amazon's going to go in their business and really tighten up their margins, right? So yeah, that's bearish. Let's take a look here at Roast, R-O-S-T. Is this bullish or bearish? It's bearish. It's trending. Bears pretty much have this controlled here, and it's going to drop lower. TripAdvisors, short, below the cloud, trending, bearish, going to go lower. Verizon, as of 3 days ago, just went into non-trending, but it's still bearish. So you see how this makes sense, how you can time bottoms and tops with this? Now, it's not perfect. Sometimes it's a little slow to confirm because we're waiting for, we're waiting for the power shift to tell us what to do. We're looking for the Parabolic SAR, and we're also looking for the cloud. So it is not perfect, but it is probably better than what you currently use, okay? So I'm going to try to get through the rest of my slides, and then I'll do nothing but live charts here at the end. So let me go back to my slides here. Trust but verify, show live charts, put it all together. Do you see how this is a powerful way to position yourself for the next big moves? You must have good setups. A good setup executed will beat the pants off of a perfect setup that goes unexecuted. Good is good enough. Don't try to filter out the losers and stop-outs. That is a fool's game and for suckers only. You got to learn how to enjoy the process of both gains and drawdowns. It is a process. Now, it is clearly us versus them. I mean, you and I versus Wall Street. This is no time to go it alone. You know that Wall Street will do just about anything and say anything to make you forget about the risk you're exposed to in today's overinflated stock market. They want to keep you fully invested and buying even more stocks and fund shares right up until the very last point of the next big decline. And they do it every single time to you. I want you to disappoint them. I want you to preserve your wealth and keep it growing safely by fully understanding the risks as well as the rewards of the markets right now. More than that, I want you to use these principles and tactics to double your money and then double it again as stock prices get hammered into the ground. Now, the mother of all bubbles mentoring program, module 1, 2, 3, and 4, how to use the power shift for swing and day trades, how to trade trends and trend reversals, how to use the Parabolic SAR for swing and day trades, how to hedge, and then ongoing mentoring. How to use the power shift. Best ways to use the power shift indicator so that you can avoid the chop. Always know who is in control of the markets so that you can trade on the right side for both swing and day trades. One is for wealth building and one is for cash flow. Module 2, how to trade trends and trend reversals. If you get this, everything else is a lot easier and simpler to deal with so that you can go with the markets and not against the markets. A simpler, easier way to trade so that you don't have to think so much. Module 3, how to use the Parabolic SAR for both swing and day trades. How to find the best stops for you to use so that you don't have to guess or worry about it ever again. How to pick the best time frame or tick frame for your trades so that you are never confused again. Module 4, how to hedge. How to hedge your trades so that you can stay in them longer, so that you can potentially increase your profits. Dirty little secret that can potentially make you a lot more money. Module 5, ongoing mentoring. Once a week for the next 4 weeks, we will meet and go over the markets live together so that we can find the turning points in the markets. A live Q&A answer session, and just bring a list of symbols and we'll break these bad boys down every week for the next 4 weeks. So Power Play mentoring program, scan picks, discover how to find the trades, live mentoring and updates so that you can see this working live, indicator to help you save time and avoid chop, a resource center so that you have everything set up the same way I do, ongoing support via phone, email, and webinars, and last but not least, you're investing in yourself is the best return that you will ever get. Indicator. Be able to identify chop versus a trending market so that you can trade the best time and avoid the chop. Tells you when the bulls or the bears are in control so that you know which side of the market to be on. You're going to work smarter, not harder, so that you can find better trades quicker with less effort. It's going to save you a lot of time so you don't have to stare at those charts so daggone much. What platforms does it work on? It currently works on Ameritrade, Thinkorswim, TradeStation, eSignal, NinjaTrader, Sierra Charts, and Infinity IAT platforms. Those are the ones that it currently works on. Now I'm going to give you a multi-chart platform license so that you can use it on more than one charting package at the same time. So that if you have Thinkorswim and if you have TradeStation or eSignal, it's just one low fee. You do not have to buy another license. I'm also going to throw in a multi-computer license so that you can use it on more than one PC. So if you have a work PC, a home PC, and a laptop, you are covered on up to 3 PCs. Easy to install. We've got these simple little videos you follow. But if you don't want to do that, we also have a free installation service and tech support. If you run into any issues, we can install it for you free of charge and get you up and running really fast. Who is this not for? If you suffer from holy grail-itis, hopium, or if you're a guru surfer, or if you can't make a decision, and if you like to make things more complicated for no good reasons, if you put an unrealistic expectation that you're going to take $5,000 and turn it into $1.25 million by the end of July, that's probably an unrealistic expectation. This is not a get-rich-quick scheme. Who is this for? If you are serious about making real money in the markets, if you are looking for a proven system, if you can follow a simple set of rules and directions, and if you know that your success is tied to you taking action, then we're probably a good fit. So here's your special offer on this webinar. If you go to hubertcenters.com/power, and I'll put this in your chat box right now so you can order it. We do have a limited amount of tickets that we like to sell on these webinars and make available. So I'm going to give you that, and then I'm going to take your Q&A and do some charts here. So the power shift, $497. Trends and trend reversals, $197. Best way to use the Parabolic SAR, $197. 4 live analysis sessions, 1 per week. It's a grand total of $988. Discount special offer only, $297 for today's webinar only. There is a catch. It's only for the first 43 people on this webinar, and then we'll close down the shopping cart. So there you have it. That is your link. Here are some reviews. The course was awesome. I've taken 1 trade, made over $900. Do you think I'm happy? I just entered the trade, shorted again, where I took profits earlier today after you made me greedy for possible further drops. I'm happy dancing. This is the first time I've had a successful trade during the course. I have the hardest head in the world. You couldn't have made it simpler. Here's a review from Greg. Dude, I don't know who says dude anymore, but we'll go with it. Thanks. You are likely the only reason I have kept at it with this trading, and now that I'm profitable, I can't thank you enough. It was really great, and I can't wait to attend the next trading class. And then here's some others from Ron. Here's one from Neil and a couple other guys. You guys don't really care about that stuff, though, I don't think. So here's a fraction of what you'll learn. Proven setups to time the markets better. Trading rules and indicator settings. Checklist with cheat sheets, with entries and exits, stop losses and targets. How to scan the markets for good ones. How to filter out the duds. You will never guess what to do next. How to potentially minimize your risk while potentially maximizing your gain. All right. So everything will be already recorded for you. It's on demand. So there is your link. And I'm going to go over here to a live chart. All right. And if you've got symbols or questions for me, I've got about 5 minutes, and then I'm going to introduce Rob and turn it over to him. Any recording? Yes, it's all recorded and online. Starbucks, SBUX. Starbucks it's got cloud support, so I would watch it. Is this a one-time fee or a subscription? One-time fee of $297. Here's the link you go to. Go to hubertcenters.com/power, and it's in your chat box. What if you're not sure whether or not you can make a decision or not, or maybe you think you might be sure? It's funny, John. John, just don't get it then, brother. It's not a big deal. I only got 42 tickets anyway, so it's not a big deal. If you don't want it, don't buy it. Not a biggie. It's not going to hurt my feelings at all. Does the ADX come with this? Yes, I'm giving you the Hubert Centers Power Shift Indicator, which is basically my souped-up version of an ADX with a histogram. Yes. Crude oil at CL. CL is bearish and going lower, probably goes to $40. IBM, here's your link, hubertcenters.com/power. IBM is, believe it or not, it's still a sell. Even though you've got bullish control here, it's going to bounce up to the bottom of the cloud. So we get into this like when you have cross current signals, how to deal with this stuff. Can this be used on NinjaTrader? Yes, it can. So on IBM, it would be a short for me as long as it doesn't break 165. Boeing. Boeing is bullish, going higher, probably 220. Let me see here. AMAT. AMAT is still bullish because it's above the cloud, but if it drops below 42, I would jump on with this bearish control here. All right. MSFT. Microsoft is almost bullish control here. It's just a little bit bearish here, but it's not too bad. At GC, gold is bullish and trending, probably bounce back to 1300. AAPL, Apple. So Jared is texting me on Slack here saying that there's only 8 more slots available out of the 43, and I'm right, almost perfect on time. 9:56, so I got 4 more minutes. Keep hitting me with these symbols. NVDA, I'll go right till 10:03. Okay, I'll go 10:03. That way we won't get behind, because some of us, when we talk, we tend to go over. So I'm trying to keep this on time for Jeanette. All right, so NVIDIA is bullish above the cloud, probably goes to 190. At US on the 30-year, the 30-year is bullish, 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 bullish. So 30-year bond is going to go higher, probably 160. LMT, Lockheed Martin, is trending, bullish, going to go to 290. COR is bullish, trending, goes to 130. At COR? What is that COR? I don't have an at COR. AAPL, Apple is bearish, below the cloud, bearish control, probably drops back down to 130. Power shift more powerful than Parabolic SAR. They're doing 2 different things, BC. I wouldn't say one's more powerful than the other. They're just doing different things. Like Parabolic SAR is doing support and resistance, and it's an always in, where you can see, like if you compare Apple here, so when you ask me that question, the Parabolic SAR is going to give you more flip-flop signals, and the power shift is going to keep you in the trade a little longer. So you see how the power shift on Apple, or not the power shift, but the Parabolic, up, down, up, down, up, down, up, down, up. That's going to flip-flop more. This is going to stay more consistent. Yep. They're not, one's not stronger than the other. They're doing different things. ADP, non-trending pass. Oh, you want cotton at CT? Is it cotton? Yeah, here you go, cotton. Cotton is a short, bearish control below the cloud going to 65. When will the module start? It is on demand. As soon as you hit the add to cart, everything is already pre-recorded and ready to rock and roll. And then you and I will meet this Tuesday to go over all the markets and actually look at all the symbols in the market. And then we will look for both bottoms and tops in the market or continuation trades. So as soon as you buy your ticket, which there looks like there's only 3 left now, according to Jared, then I'll meet you this Tuesday. So you got all weekend long to go through the course, or you can take more time if you want to. It shouldn't take you very long to get through it. Twitter, TWTR. Twitter is bullish, trending, above the cloud, probably goes back to 20. Price, $297 if you go to hubertcenters.com/power, and it's in your chat box as we speak. Do you have this available for web base? What do you mean? I don't understand the question. All right, Priceline. PCLN, Priceline. Priceline is non-trending as of 3 days ago, so leave it alone. Meeting time Tuesday. It's either 7 or 8 o'clock. It depends on what's going on that week, though. All right, it is 9:59. I'm going to turn it over to Jeanette. Next up is my good, close personal friend, Rob Hoffman. Now, Rob Hoffman that competes in these trading competitions, and he's got more trading championship titles than anybody else that I know in the world, and that's saying a lot because I know a lot of traders. So I know the stuff that he's going to be helping you with today and showing. So Rob has never lost a trade, correct? No, Rob loses money on some trades. Yeah. He can go over that though. Like, yeah, I mean, Rob has lost money on trades before. He has actually lost a trading competition too. Yes, the man is not perfect. He's a human, but he's not a robot. But he is really good and effective at what he does, and he's going to share with you today how he wins those championships. All right, he's going to tell you what happens when he follows his rules and what happens when he does not follow his rules. So without further ado, I'm going to turn it over to either Jeanette or Rob. I look forward to seeing you this Tuesday in the Tuesday class as we scan the markets together. Good luck. Have a great rest of your day, and I'll see you next week.